What's up? Welcome to Finance for Fridays. This is your weekly 5-ish minute dose of real estate and home financing information. If you don't know something about home financing, after this, you're going to know a lot. So, hey, I'm Haley Jones. I'm a real estate agent broker by EXP based out of Knoxville, Tennessee.
And I'm Shay Martin. I'm a loan officer here with Mortgage Investors Group, also based out of Knoxville, Tennessee.
Okay, so today is a major, we are talking pre-approval, which is like huge, so exciting. I'm so pumped for this. Shay, okay, how would you define or explain, like if somebody said, what is pre-approval, what would you say?
Yeah, so pre-approval is critically important to the process. It's basically the first step of the home search and the home buying process. And it can be very simple. So really the pre-approval is just starting that conversation with your lender and starting to get your information to the lender and telling them, income, credit information, things like that. So all the basically starting a conversation with the lender and giving them your financial profile is really how you start the pre-approval process. And the pre-approval is basically the first step in the lender reviewing your information to determine that you are eligible for home financing.
So it tells you you're eligible, and it's kind of your first way to know, can you even buy a house, right? And then does it give you a number, a value? Does it say absolutely not, you can't buy? Like what do you kind of get out of the process or out of the pre-approval?
Yeah, so it's like I said, it's that initial conversation. So really a true pre-approval, when it is official, it should determine how much you can purchase. So it's going to, part of that process is determining best loan program and things like that. And then we'll tell you what your maximum amount is. Now, sometimes we'll back off of that and keep you where you're comfortable. So that's all part of that process, is figuring out what you can afford. So like I said, it's the first step. Browsing online is great. And even kind of starting a conversation with a real estate agent is great. But to truly know what you're comfortable with and what you can really afford and how much you have to have down and things like that, you always need to start that pre-approval process and start that conversation with a lender very early in the process.
Okay, so I've been watching Zillow and I just saw the coolest house and I got to have this house. But I haven't got my pre-approval yet. So how long should I expect? And are there major documents I need in order to get that pre-approval super fast?
That's a great question. So obviously every loan program or loan profile is different. Every borrower is different. So typically my goal is, I tell you, give me 24 hours, but my goal is to give someone a same day response. Like I said, everything is different. If you're self-employed and your income scenario is a little bit different, there might be additional documentation that we have to review. But typically we can get all of the information from you, do that credit check, and get you an answer on your pre-approval same day, usually. Like I said, that's my goal. Customer service wise, I want you to know very quickly what you can do.
So same day, some of you procrastinators out there are like, I'm good, but you're not. Would you say that you need a pre-approval to make an offer? Like what would you say on that?
Of course. And really, like I said, you can probably speak more to this from your side of things. In this market, in this day right now, you have to have a pre-approval to be taken seriously. In the past, people would kind of start the process and then they'd reach out to a lender once they got under contract, even though, and like I think you and I have talked about it, technically your contract says that you have 3 days to make application. However, if you want your offer to be taken seriously, if you want real estate agents to take you seriously, you need to have that pre-approval in hand and have already had that conversation with the lender so that there's no questions out there that you are serious and you're legitimate and you are, what you need to do to secure your home financing.
Right. I mean, it's kind of like right now there's so many buyers for every house that you are not an actual buyer if you do not have a document that says you can buy this house. And like a seller is not even going to waste their time with you, especially when sellers are seeing 20 offers, all of which have verified funding, whether that's a bank statement or a pre-approval letter. Like you are not going to be competitive. So it would kind of like be going to Walmart or wherever you shop, Neiman Marcus, I don't know where you shop, but like, and rolling in there without any money to buy it. They're going to be like, what are you doing in here? So
Exactly.
anyways, okay. So how long does a pre-approval last?
Yeah, so that's a great question. So really, the length of a pre-approval, I say it's like the shelf life of the document. So it's whatever we've reviewed for your credit, for your financial profile, is how long your pre-approval is good for. So obviously things like tax returns, W-2s, things like that don't have an expiration date, but a credit report does have an expiration date. So credit report is good for 120 days. So because of that, we typically say that your pre-approval then is good for 90 days because it gives us that last 30 to get your loan closed. So you've got 3 months to look for a house. That last 30 days is to get to for loan processing and to officially get your loan closed. So that your credit is still active on the day of closing, because it does have, you have to have an unexpired active credit report on the day that you close. So like I said, credit report's good for 120 days to 4 months, but typically we back off that and say your pre-approval then is good for 90 days so that we have that last 30.
And as a lender, like, is that something that, like, when you're working with clients, say they have a pre-approval, but by the time they're going to be closing, it's going to be expired? Is that something that you rerun? Like, what does that look like?
Yeah, so we do put an expiration date on our pre-approval letter, just so you know that if you're beyond that 90 days, there is a chance that we're going to have to update your credit. So I always say, it's good just to stay in contact with your lender. If you find a house that you plan to make an offer on, have a conversation with your lender and say, hey, is everything still good? We'll look at the dates of everything and tell you, okay, we're probably not going to close your loan in a week. If your credit report is going to expire in a week, then we would obviously have to update that to issue that new pre-approval. So again, if you have that conversation, it can be out there, you have some time to find a house, but if you do find something that you're serious about, check in with your lender, because again, the pre-approval is only as good as the information that we verified at the time we talked. So if you change jobs, if you've made a big purchase, if anything in your financial profile has changed, you need to let your lender know that, because that pre-approval then the initial pre-approval is no longer valid and we have to update that information.
Gotcha. So definitely sounds like you want to be in touch with your lender regardless of even that deadline.
Exactly. And things are moving really quick. So, just a quick, for me, text message or email or something and just say, hey, found a house, love it, everything still look good. Obviously, if we talked a couple days ago and there hasn't been any changes, yes, you're still good. But if it's been a couple months, definitely check in.
So do you need a new letter for every offer?
That's a great question. So how I like to do things is basically the pre-approval letter is generic. It is for the borrower, the buyer. It tells them what they can do. It's not specific to a property address. At least MIG's pre-approval letter is not specific to a property. However, taxes, things like that can impact the payment. And so we always want to look at, okay, what's the payment going to be for this specific house, and does that still fit in with everything? Obviously, we're going to try to estimate to the best of our ability. But one thing with a pre-approval, I have customers sometimes that say, I only want to purchase a house that's $250,000, but technically I can pre-approve them up to $400,000. So I always have that conversation with them and just say, hey, on your letter, this letter is going to go to your buyer, the buyer's agent, the seller's agent. Sometimes the seller is going to actually look at the letter. How much information do you want to tell them? If you can go to 400, but you're only trying to buy a $250,000 house, maybe we only put the amount that you're wanting to offer. So we don't necessarily need to put information out there if it's not critical. So I always have that conversation. I leave it up to the customer and say, what amount do you want me to put on here? So like I said, you don't have to have a different letter for every offer, but sometimes I always like to tell people, check in with me. I'll update that to match your offer. Just again, so we don't have to tell everybody more information than they need to know.
Right. I think that's good. That's important. And I think, obviously different lenders do things differently. And so I do think there is some strategy in not putting all of the information out there, especially from a lending perspective, especially right now, because people will be like, well, why aren't you offering more if you're approved for more? So anyways, how often in this process is your credit like dinged per se? And should that be a concern for somebody that's like, I want to get pre-approved, but I don't want it to ding my credit? Like, what is that? What is your thought towards that?
Right. So part of the pre-approval process obviously is that credit check. So to do that to do an official pre-approval and to really issue that letter, we do have to verify that what your credit score is, and obviously analyze that debt to income ratio. So we are a hard pull. We will pull all three bureaus for a mortgage credit report. But you do have protection in place. So the CFPB has issued protection that will allow consumers to shop for financing. That's mortgages, cars, things like that. You're able to shop. I don't know if you've ever bought a car, but if you've ever bought a car, you will have your credit checked by 20 probably different companies. So you're allowed to check, shop for financing. Typically, and there's some, debate on this. They say within a reasonable time frame. Some people say it's 30 days. I tell people I would give it about a 2-week window. That if you're checking and multiple lenders are checking your credit, it's not going to impact your score. Again, that protection is in place because they want consumers to shop for financing and not feel like they're locked in with the very first person they talk to.
So you have a little time to see, like, is this the best option? But you're saying it's not something where you're wanting to pull it once every 2 months or whatever.
Exactly. I mean, inquiries can impact the credit score. So, do less harm, basically. So you don't want to go around and have your credit checked by a mortgage company and have your credit checked by that auto finance company, and then also have your credit checked by somebody else. Those will start to add up and will start to impact your score. Hopefully your credit is fine and inquiries aren't going to impact your score. But I have seen instances where inquiries can start to impact the credit score. So yes, you don't want to be running around town letting everybody check your credit, but you do want to also shop for a mortgage and get the best option out there for you.
Right. Okay. So once I get a pre-approval letter from you, maybe we start the initial conversation, and maybe I even get under contract. And then I'm thinking, oh no, there's a better rate over here, or I need to go with someone else. Or basically, are you locked into a lender at any point? What does that look like?
Yeah, so that's the big thing. Getting pre-approved is not going to make you obligated to use a specific lender. So, obviously, if I've helped you in the pre-approval process, I'd love for you to go with me.
Right.
But, just because you started a pre-approval with someone does not mean you're obligated. Technically, I tell people you're not obligated to do your loan with MIG until you sign on the bottom line at closing, and then you've signed that note and you've agreed to make your payment. So, Haley, you probably disagree with me. You would probably say, no, you're going to need to pick your lender before that. And obviously there's time frames and there's things like that. But, technically you are not obligated just because you made pre-approval. Once you're under contract, I'd say you want to pick your lender within the first couple of days, especially right now. Appraisals are taking longer, things like that. You definitely want to pick your lender soon to get everything started and make sure there's no delays to your closing date.
Right.
Yes, if you're working with someone and you don't feel good about it, check with somebody else, because I have a customer right now who was working with a different lender. They told her, she didn't like their terms, and she came to me and she felt like she couldn't make the switch, and we've got her approved now. So there's definitely possibly other options out there. If you've been working with another lender and want to check with somebody else, you're definitely welcome to do so.
Right. And I'm not saying jump around or whatever. I'm just saying, I think that, and to your point, I think you should feel comfortable with who you're working with. But I also think, people, you aren't necessarily locked in, but at the same time, when it comes to timeline and all of that, remember that your lender and your agent or whoever should have your best interest. So ideally, 99% of us out here that are working either as an agent or as a lender for you, we have your back. And so, we're going to be straight up with you or whatever. But I would say, don't be jumping around once you're under contract.
Yeah, I mean, once you have a good feeling with someone, stick with that person and stick with your agent, stick with your lender. There is, like you said, we've got people's back. We're here to help.
Right.
But you're not obligated. So don't feel like you can't, don't let that be a hindrance to making pre-approvals, to making loan applications. So don't feel like you can't start the process just because that's not who you want to finish with. You're not locked in. You're not obligated to use anybody just because they've checked your credit.
It's funny. I didn't even realize that until just now. I didn't even know that. I'm just like, oh my gosh, you're not locked in until you close. So anyways, Awesome. Okay. So I think that's everything. Do we have anything else? Did we get everything?
I think that's about it. I mean, I think that covers the general gist of a pre-approval as far as, it's a pretty easy process, but again, everything is different. If you have specific questions, it's, the big thing is starting that conversation. And we talked about this last week. Start that conversation. Don't be afraid to reach out, and then let, Haley on the real estate side and me on the financing side, we can direct you and we can help you. We don't expect you guys to know everything. So reach out and we'll help direct and answer any questions that you might have.
Yeah. Okay. Did we talk about pre-qual versus pre-approval? Did we mention that?
I don't know if we mentioned that. So basically, there are a lot of those you'll hear those terms used interchangeably. Pre-qualification is really, I like to say, that's the initial conversation. That's kind of on paper when I'm making notes and I'm talking to you. I'm running numbers. I'm calculating things. People probably don't even realize they're getting pre-qualified just by talking. But as soon as you start telling me things, I'm calculating your debt to income ratio. I'm calculating your income, things like that. So on paper, what I would say would be your pre-qualification. But when you are, once you are serious and you want to make an offer, you need a pre-approval, which means your credit has to be checked. So pre-approval is just a little bit more official. Pre-qualification, it just, that's that initial conveation, basically, is how I would describe it.
And I think that pre-qual, I would just advise, if you're thinking of buying, you're seriously thinking of buying, do not like writing an offer with a pre-qualification is not going to be sufficient. Like, you're going to need approval. So,
and that's, I have people that are like, I just don't know if I want to buy next month or if I want to buy in 6 months. And that's kind of where we would do the pre-qualification, is just start getting some information, starting the conversation. And then once they've kind of nailed down, okay, I think I'm going to buy within the next few months, then that's when we would do the pre-approval. So yes, there is a time and a place for pre-qualification. But again, that's the very initial first step. And then we would move forward with the pre-approval.
Awesome. Okay. So the moral of the story is pre-approvals are great.
Oh, of course. They're extremely important. They're great. And it's not hard to do. So it's not hard to reach out and get that pre-approval so that you can be taken seriously.
Okay. I think that's all for Finance Friday. If you have questions, give me a call. I'm Haley Jones. I am a real estate agent with EXP.
And I'm Shay Martin with Mortgage Investors Group.
And thanks for tuning in on this Finance Friday. We hope you guys have a great weekend, and we will see you next week.